Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, now Captain Finance himself, Sully.
Wherever you are watching, wherever you are listening, we welcome you inside the Loft 100 studios, another edition of the Big Biz Show. And as we like to start off every single show around here, we start it off with a cumpleaños.
Howdy to ya.
That's right. That is the Day Trader Trio. Always ready to go with the big old howdy to you. Back here at the bar, it's Costa, it's Mary Godwin.
Who was we used to watch children's TV.
Yes.
Bozo
the Clown.
Johnny Downs.
Oh my God.
Hobo Kelly.
KTLA in Los Angeles.
Senior Winchester. His
Senior
fist. No, wrong one.
Howdy Doody.
Howdy Doody.
He was a marionette.
That's exactly.
Howdy to ya.
That's what I was looking for. There needs to be some sort of confluence. There needs to be the confluence of some sort of Did you snort again? Twice.
No, because I was thinking of the Happy Days episode where Richie Cunningham enters a Howdy Doody lookalike contest just because he wants to get the picture of Clarabelle the Clown without makeup.
Yeah.
And he's so put off because the kid who won just went like this.
Yeah.
And that's
can there be some continuity between the name of the show and your shout out? Because Howdy Doody Show was a big old howdy to you.
Right? Oh, I think
you're ripping off a syndicated deal.
That needs to be, I think
it needs to be
engineered.
Yeah. So how about welcome to the program?
A big old biz hello.
We're in your biz.
Ooh, I like that.
Up in your biz.
Up in your biz. Up in your biz.
Up in your biz.
And we're upping your biz. Howie Font joins us here, our lead analyst. What's up, bud? Good to see you here.
Howie.
Save us, Howie.
A big old Howie to you. A big old Howie to you. There it is. That's where it goes. The big old Howie to you.
Perfect.
Hey, Howard, the Justice Department served the Fed Reserve with a subpoena, which is interesting because I've maintained that we also be reading, it's a bathroom reader. Like every time you go to the bathroom, you can read the whole book. It's called The Creature from Jekyll Island. It's not really that short, but it's a very simple read. But it talks about how the Roosevelts and the
Carnegies
and Vanderbilts all went to Jekyll Island one night and decided to create a banking system, or with some, I believe it was sincere checks and balances type system, but the Fed Reserve is shrouded in mystery. No one actually knows who owns the Fed or how much they own. It's widely suspected that it's the banks that use the Fed that owned it, but nobody knows the percentages. How we talk about this interesting story here, because this may be the opening to transparency to the Fed, believe it or not, correct?
Yeah, so there have been bills that have been proposed to try and audit the Fed or anything like that, have more direct oversight, get into the book, so to speak. The Fed chair and the Treasury Secretary usually meet once a week, but it's not something that's ever been given to the public as far as, like you said, ownership or even holdings. You know, the Fed holds tons and tons of gold on behalf of other banks and other countries. So, you know, it'd be interesting just to know what their actual holdings are even. But what happened last night is actually a fairly big deal, and it's a little bit different than all of that. This is kind of an unprecedented action based on, we've talked about these renovations that the Fed was doing. And so the Fed Chair Powell spoke on that over the summer to the Senate. And the Justice Department is accusing him of lying, and they got a grand jury to.
And that's a criminal. That's a criminal offense.
Or not to indict, to subpoena.
That's a criminal offense.
If he did it, yeah.
If you did it.
We don't have any evidence, but obviously they were able to get the subpoena, so there must be something that the prosecution can say to the government, to the judge and to the grand jury. So it's a little weird, though. We don't want to have a system where, you know, the government is fighting itself and we have this whole pyramid of stability that all of a sudden crumbles from the bottom.
Talk about Fed renovation. I think that's important for you to understand.
Yeah, so there has been an ongoing renovation of a couple Fed buildings.
Two historic buildings, by the way.
New York City. Yeah,
Okay.
yeah. Historic buildings. They pay for it itself, but again, this is a pseudo-government entity at least, so they have to respond to questions from the Senate. They cannot lie.
And the point is, because you're talking about oversight, but the problem is this looks like remember the movie Waterworld? It cost $500 million to make, and it made about $1.380 at the end of the day. I mean, this is about cost overruns and drivers, and it's about the oversight transparency, right, Howie?
That's true, but it's kind of a small deal compared to the actual function of the Fed. It is a thing that the Fed is doing. The Fed is doing new buildings, but I haven't even heard what the source of some corruption could be, to the extent there are cost overruns. The only thing I've heard is that the Fed is being too bougie, maybe spending too much.
Well, it's $2.5 billion, and Donald Trump has weaponized this, obviously, in his speeches. So I guess the question is, to what end? Every time Donald Trump does something, whether it seems like brash or there's always an end in mind. In my opinion, Donald Trump has an end in mind. He's going to do the rope it up, walk in, and bink, right there. So I don't think he weaponized it for the reasons he's saying.
Is it to get Powell to step aside sooner
Probably
than
so, right?
his retirement date?
Yeah, but I've been hearing some arguments that are interesting. In May, the Fed chair, his term as Fed chair, not as governor, but as Fed chair, ends, and then the president will be able to appoint a new Fed chair. But Powell usually they resign and just leave the board, and then somebody else comes in. But he has 2 more years where he could be just a vote. And so it's looking like he's going to stay instead of...
Howie, 2 questions.
Stepping down.
Why is the timeline important, and what's the bottom line here?
The bottom line is this is a move. This is allegedly, but very likely, a move to put pressure on the Fed.
Because if nothing happens, it sets a precedent for putting pressure on the Fed, right?
Yeah, that this kind of thing is allowed. Now, I think the thing with Lisa Cook, the Fed governor that had the mortgage issue,
right?
That's a totally different can of worms. Okay, that is a legit paperwork oversight. That could be a crime. That's a much bigger thing. It was referred in a different way. This is the government coming over the top and using this renovations issue to put pressure on directly the federal interest rate. And you saw something that you haven't really seen before. You saw a kind of agitated, more aggressive Jerome Powell put out a video last night saying this is not about this renovation. This is about a president trying to influence interest rates.
The last of all, Howie, is the timing issue as important or equally important as the fact that this opens up a new door of scrutiny? Or is the scrutiny issue really that interesting?
Yeah, listen, I think it'd be interesting to audit the Fed. I think there's a lot of reform that you could do as far as transparency or as far as what they can do autonomously. I don't think you threaten to have them all thrown in jail to get what you want policy wise. Yeah. And I think that's kind of that's the threat. I don't think it's going to happen, but that's the threat.
The Big Biz Show's market analyst Howie Font. Always like to welcome you into the show with a big old Howie to you. I guess that's the way it's going to be.
How did it take us so long to figure that one out?
I know, well, you know how much cement is between these ears? All right.
It's the 6 inches between the ears that Mike had filled in at a young age.
Exactly.
With rebar and concrete.
Whipped cream.
Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks. If we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer@sullyentgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
Wherever you are watching and wherever you are listening, we welcome you to another edition of the Big Biz Show, live from Southern California, inside the Loft 100 studios. That right there, starting your day off right, the Day Trader Trio, best in the business, no less than self-taught. Back here at the bar, it is Costa, it is Mary Bird Godwin, it is Sully, and as we like to start every single show, we welcome you with a...
No, they did it last segment. Forget it. You know, I kid when I say this about when we talk to CEOs or actors or authors, they're so busy to give us our time. Aaron Day is doing the work of 10 people.
He really is.
But it's amazing. Here he is. Hey, buddy, how are you? Good to see you. Thanks for stopping. Thanks for stopping. Powering commerce here.
Welcome back.
I want to get right into it.
Happy New Year, guys, by the way.
Yeah, you too. On Thursday, January 8th, you turned on the ability for creators to share their content on foodchannel.com. Let's go through that story because you guys made an acquisition. That's a big part of what we're doing here as well, and we'll keep you posted on that. But just take us through, Aaron. But no one better to explain it than you.
Yeah, it's very exciting. We were prepping on Thursday morning around 9 o'clock. I was on with Natalie, who runs all the internal operations of the Food Channel business. And she said, Aaron, at 9:30, we're turning on the creator flow. And I said, how many creators are going live? And she said, well, I'm gonna let 15 go through for the first hour or so. So we turned it on. 15 creators started creating content for the Food Channel. Great content.
Wait, here's what I want to know. How many people were waiting to upload after the 15 went on? What was that like?
Over 500.
Wow. That's so great.
And then we announced the revenue split, 70-30 revenue split for advertising revenue, and it jumped into the thousands. And Natalie called me and said, "I think I need some help."
Yeah. So can you explain?
If you look at it, the first 5 videos now are uploaded, creator content, great content. So very excited about it, and we're now full force ahead with thousands of people lined up to create content for the Food Channel. So.
Hey, Aaron, I love this because I've gotten sucked in on Instagram to food bloggers, Foodstagram is what I guess they call it. But, and it's like I'm getting the links or I'm able to buy the blends, the Harmony blends salt that they use and the equipment. So this is a perfect thing for you because then these content creators can sell the equipment, the food, the spices, everything. Is that how you're merging this world?
Yeah, it's coming very soon. So we did a whole bunch of work to the foodchannel.com to get the technology modernized. Now we put in the ability for creators to come in and upload their content. Remember, a lot of this is long form content too, so it's great content.
Yeah. Yep.
Recipe channels are running. The recipes are now live, and all the products that are available in the recipe will be available soon to be purchased live during the videos and during the live events. And then starting next week, we start filming live some of the weekly programs that are going to come in. So just enormous amounts of interest, and sponsorships are lining up. So we have already over 100 people who've hit our websites asking for sponsorship opportunities on foodchannel.com. So
we're gonna be busy here, buddy. A
little bit.
When I say we, I mean you.
100%, yeah.
Aaron Day is the CEO of Amaze. Their ticker symbol is AMZE. Website is amaze.co. Aaron, I would like to upload my channel. It's called How to Boil Water. I think it's going to be awesome. I mean, you can just sit there and
I bet that's a huge audience. How to boil.
Mary, do me a favor when you get off the air. Google Frood, F-R-O-O-D.
Okay.
It's a new term by this really successful food creator. She will not let Mike on her channel, no matter what you do. But she will let you on, Mary. I promise you.
Oh my God, that's so great.
But hey, I'm sorry. So I'm just curious. How big is the cross section of the content on Food Channel right now?
It's everything. I mean, from how to cook winter chili to the latest and greatest way to create enchiladas. I mean, it's everything you can imagine, and it's fun. It's exciting. It feels a bit like watching Cake Wars / Guy Fieri. It's a really good dynamic mix of content coming in, and very professionally done. I'm very pleased with the initial flow of. It's not done on your couch in your bedroom with your phone, right? It's looking good. So
do you know who Time Warner is? Do you remember? Do you remember Beanie Babies?
Oh.
Hey, this guy has the coolest. Like, if I can live in any, listen, I've seen a lot of cool properties. Yeah. If I can live in anybody's property, it'd be that guy's property. What is the deal with the plush toy thing? I mean, I'm pretty sure my kids could have gone to a better college.
I have so many of them.
And you guys are now you guys are talking about a plush experience over there. What's going on with that?
Yeah, so let's get the phrase right, because you're showing your age a little bit, Sully, here.
Plushies.
Okay.
Plushies. Sorry.
Okay. So over the last couple of years, we've dabbled our foot in being able to allow creators to use our design software, our 3D design software, so many of the wonderful tools that Juan and our product team have built, but getting the supply chain right so that you can actually have a creator create something that's physical in the form of a toy, and then manufacture it at scale in the right way. In our model, it hasn't been really easy. There's a couple companies that have just done that little niche thing, but the volume of people that want to create a plushie of their content, of their brand is just staggering. And so with this new OpenWave AI partnership we have, one of the beautiful things about OpenWave is that they were Asia first. They built their business in the East, and then they moved it to the West. So they have a very, very good established supply chain in China of people who do nothing but create short-run orders of plushies. And so our team's actively at work here getting ready to launch this new plushie business, which will allow not just one or two creators, but thousands of creators to create their own toy line, their own plushie line. It's exciting, and we're just touching it right now. And you can see the people lining up saying we're ready to go. And what's really interesting is that there's not a lot of inventory costs in this, because people start pre-buying.
Wow.
And then you make to order. So very excited about this plushie.
Our big biz plushie is Mike. Mike is our plushie.
The only thing is we gotta be a little bit careful, because my wife's name is Biz, so we can't call it the big biz plushie.
We can't. Oh, okay. That's right. The hot biz plushie. There you go.
Aaron Day, CEO, Amaze, ticker symbol AMZE. Again, the website amaze.co. Huge stuff coming. Huge. All right, keep it right here. More huge stuff coming your way as the Big Biz Show continues after this. Big Biz Show continues. As always, we appreciate you being along with the gang here inside the Loft 100 studios as we roll on. Day Trader Trio right there. Just as good as ever, just as awesome as ever in 2026 as they were in 2025. Back here at the bar, it is Costa, it is Mary Burt Godwin, and it is Sully.
Great to have you along today. 85 million TV homes strong, not forget our American Forces radio and television services in 175 countries and all the ships at sea. I'm happy our next guest is on the air with us, because it is that time of year again where we have to start touching on a little bit of biotech. And of course, the JP Morgan conference starting here in Southern California. Who do we have coming up?
Waqaas Al-Saddiq is the CEO, officer, and founder of Tricity Incorporated. Their ticker symbol, BTCY, and we welcome him back to the Big Biz Show.
What's up, Dr. Al-Saddiq? Good to see you, man.
Nice to see you too. How are you doing?
Good, man. Waqaas is one of my favorite people, because he's the same personality as I am. Hey, Waqaas, does this dress make me look fat? No, Sully, your face does. He's one of the most straightforward guys I've ever met in my life. No, honestly, we both have the same personality. And when we're talking to each other, you can't tell. I think I like this guy. I think he's good. Hey, talk about cardiovascular disease, because as usual, it's the leading cause of death in the U.S. You guys at Tricity have a really interesting model in terms of attacking not only cardiovascular care, but you also took a look at this thing in terms of annual healthcare costs, which I thought was really interesting. I've never seen a biotech person actually talk about the business model involved as well as the therapy. Talk about what you guys are up to.
No, absolutely. I mean, as you said, it's the number one killer, and I think that people, one aspect of an issue being a number one killer is really understanding how technology is utilized or not utilized, right? And so we looked at the business model because we understood that adoption and whether or not you can deliver care to these patients is going to be directly related to whether or not the hospital can afford or the clinic can afford these technologies, and then if they can service it. So we built our cardiac platform to not only get results and insights to the physician faster so that they can deal with those patients quicker and the wait times are shorter, but doing it in a way that is reimbursable, that is revenue generating, that is profitable. And so we help them open up billing codes that were otherwise lost to them because they were service providers doing this. So bringing that revenue back into the clinic allows them to hire more people, service more patients, and ultimately target the number one killer.
Doctor, how many people out there think, I'll drink some beet juice, I'll eat some kale, and that's how I will, ward off cardiovascular disease, and then don't do anything about it or don't find out about it until they're in the doctor's office and it's at a serious stage?
Yeah, I mean, one of the problems is that cardiac issues are so intermittent. And that's the big problem. And so, you have this huge rage going around about GLP-1s. Well, if you were overweight for a long period of time, you were obese, your arteries are clogged. Yeah. And so using a GLP-1 and losing 100 pounds is fantastic, but your arteries are still clogged. And that's the big problem.
What's interesting is if I have this correctly, and I've interviewed you a number of times, your long-term vision is to sort of have a seamless connection between clinical care with daily life and so on and so forth. And I think that patient experience can be described as impactful. I think the word impact probably applies to you guys better than anything. Talk about that, because one of the things you and I have talked about a number of times is that you got, I don't know how many millions of adults that don't have access to healthcare, or trying to dig their way through. I think access to quality care is a barrier to entry. And you have a barrier to entry in businesses, but barrier to entry to getting healthy is a rough one, is it not?
No, 100%. And we've really tried to kind of impact that. I'll give you a couple of examples. I mean, we had the technology, we make it available to the cardiologists, and then we started getting these calls, and people are like, well, which doctor nearby that has access to your technology? Like patients calling in. And we said, well, we can't actually service you because we don't have a doctor that utilizes our technology in your area. And so what we did was we made a consumer version of our product, and that's available on Amazon and our website. And people are actually buying this every single day. And what we're finding is that they're waiting 90 days to see a cardiologist, or they can go on Amazon and they can buy our product and they get some insight. So by the time they go to the cardiologist, they've got all of this data. And so we've been trying to address it to exactly your problem. You have a barrier to business, barrier to access to physicians. And so if we can help by making it more accessible, so making the technology available to the consumer side and making it available to the doctor side, we're trying to bridge that gap.
Is the technology you're talking about available on Amazon, is that the BioHeart?
That is the BioHeart, correct.
So that is something, it's not, Mike was talking about food and intake and changing what you eat, but it's also sleep, what you drink, your stressors, it's all the things. So BioHeart is something that people wear and monitors all of these things and helps people get an overview of all of the factors that are affecting them.
Exactly right. And you can wear it while you're sleeping. And the good thing about that product is that the data that we're collecting is clinically relevant. So if you ever took it to your physician, they can actually interpret it and they can leverage it versus, something your Apple Watch says or your other smartwatch says. That's not clear. That's not clinically relevant. So you don't know whether or not that data can be counted on. And there's also this scare factor. I mean, we just had a recent inquiry. I just happened to know this from last week, where a patient went down a cardiac monitor for 24 hours and was freaking out and got a referral to a cardiologist. Wait time is 60 days or 63 days.
I mean,
they got the BioHeart and they collected all this data and they realized that it's not that scary because the event happens once in a while. But on a 24-hour monitor, it was happening, the percentage was higher, right? If you take the same data over 7 days versus 30 days, the prevalence rate can be lower or higher depending on how often that is occurring. So they're like, I've got peace of mind now. I'm less stressed out because I realize it's happening very rarely because I've got full access to my data.
Dr. Waqaas Al-Saddiq, the CEO, founder of Tricity Incorporated. Their ticker symbol is BTCY. Doc, how hard is it or how easy it has been to get the word out about what you're doing?
Healthcare is very slow. There is this unsureness from physicians on adopting new technology. I always say when you graduate from medical school, like they're experts in, medical literature that was published maybe 15, 20 years ago.
Oh, God.
So it's been a challenge. But, we're in 35 states. We're growing every quarter. We're, just on the edge of profitability. So, we're trying to reinvest those dollars. And, I always tell everybody, like, I'm interested in growing and making this available everywhere, not trying to, make the most profitable and high margin business. It's all about, driving and staying true to our mission and vision.
I think one of the things too is that, innovation, as you have said on this program, thrives on speed. That's a frustrating thing in your business when the wheel moves so slowly, and you have to kind of feather that whole speed precision with as fast as it goes. Man, I hope you come back on to us on a regular basis. I really appreciate you coming back with us, Waqaas. I mean, it's always a pleasure, and I actually feel better about Mike's AFib.
Dr. Waqaas Al-Saddiq, CEO, founder of Tricity Incorporated, ticker symbol BTCY. Okay, keep it right here. We've got much more coming your way as the Big Biz Show rolls on. Do not go anywhere.
Loft 100 Studios, the Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer@sullyentgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at SEC.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
In over 175 countries, all the ships at sea. You can hear us on the American Forces Radio Network. Always a shout out to the brave men and women of our United States Armed Forces. Always a shout out to Day Trader Trio right there, live and in person. Love when that happens. Back here at the bar, it is Costa. It is Mary Burt Godwin. Of course, it is Sully.
Are you starting to look at the price at the pump now? Or just drive in and just fill it up, and just suck it up?
I just drove to Arizona over the weekend.
Ooh.
It was so great.
Oh, it was great.
I mean, it was better than here.
So do you calculate how many miles you have to empty and then just give exactly that, then fill up over there?
Then fill up again. Yes,
I can do it.
Let's take a look at it here.
Oh, look at that.
On the screen, yeah. There you go.
Awesome sauce.
How do you like that? 371. Boy, if only California's average. That's, by the way, 371 is what that equals is that's the lowest price
Yes.
in the state of California. Who do we got coming up? Well, I think he's one of my favorite guys at Credit Risk Monitor.
Michael Flum is the CEO president of CreditRiskMonitor.com Incorporated. CRMZ is their ticker symbol. Always great to have him back here on the Big Biz Show. Michael, how are you, buddy?
Doing well. Thanks for having me back, guys.
Hey, the supply chain story is getting more interesting now. We're going to 2026 because of the geopolitical news that we keep on hearing. One day you get fearful just as a consumer that it's going to look like COVID again. And I remember flying from Carlsbad to LA, next to the coast, hugging the coast, which is about a 15-minute flight.
Yes.
And as you pull in, you can like pick, oh, wow, there's San Onofre. Oh, there's Dana Point. Oh, there's Long Beach, Port Los Angeles. And normally you see from the air, a couple tankers waiting. You saw tankers waiting down to Oceanside, California, which is in San Diego.
Oh, yeah.
On the way during COVID. One day I'm feeling a fear, Michael. Then I'm starting to feel like things are going better. What's the real story with our supply chain issues globally right now? Is it a mess like I'm reading about?
It certainly is. I mean, I remember actually I went for a baby shower. I think it was in 2021, 2022 in Southern California, Orange County. All the same thing. And I was just like, actually, the guy who I went to visit, one of them's a pilot. For getting into the Port of Long Beach, and he was like, literally, I'm working more hours than I possibly can handle, but the money's too good. So I think we're getting back.
So is artificial intelligence, machine learning helping your business?
Certainly is. I think it's democratizing access to data, right? Now, the bigger thing for us is how do you take that data and turn it into interesting insights? And that's where I think, specifics overlaid onto these great foundational models makes a big difference. So, I know Claude and I know OpenAI spend a lot of time talking about, coming into the finance space, and they've done a really good job at democratizing, I think, some of the typical financial workflows, like putting together, DCF models, et cetera, things like that. We're in a little bit of a different space because our clientele are really more in the accounts receivable, accounts payable positions. Sure. No, it's a slightly different thing, but yeah, it's definitely helping us a lot.
Can you?
I will also
go ahead.
One thing that's astronomical for us is we're getting now, the closing data for 2025 on bankruptcies. Yeah. We were actually just a marketing piece for this, which I figured I'd share with you guys. But we had Chapter 11s, Chapter 7s in the U.S. I think over 22,000 this year now.
God,
that's an 11-year high through trailing 12 months of Q3 2025. And we exceeded last year's by 18%.
Well, this is why your financial risk modeling in Supply Chain Monitor is such a big component. I realize that's not all it is, because obviously, Supply Chain Monitor can monitor an entire supply chain. But they're also a pretty big module in there, and that's called financial risk, right? And that's.
That's our niche. Everything else we add on is ancillary information, in terms of what you need to understand a 360, degree of your supplier's risk. But we always have specialized in financial risk. And so that's the core of the component. I think actually to your point on supply chain, though, one of the other interesting things that we saw on a cost inflation basis was we launched a metric called the risk level earlier last year, I think Q3. And basically, it's a categorizer where we can take any of our scoring models where you're showing high risk and basically bracket that into an aggregated high risk category. So for publics, privates, doesn't matter. And the point is, for U.S. companies with a high risk tag, we saw the trailing 12-month net profit margin actually equaling about negative 11.5%.
Hey, Michael. So remember the days of containers, standby letter of credit, backed by a AAA bank. Your stuff stuck on the dock, not because of it can't get unloaded. It's stuck because you can't get somebody to give a gold medallion signature on top of your. And I know this sounds foreign to a lot of people, but I'm talking Mike's language here and how it used to be when you ordered a bunch of plushies from Japan to Beanie Babies and couldn't get them off. They went right. Is your model based upon moving out of that non-collaborative credit finance supply team model to a more is that really the whole idea here, is to get out of that sort of mess because you are making the process more friction-free, correct?
Yeah, I think a lot of it is actually just giving the folks on either side of these transactions the information necessary for them to ask the right questions when they're engaging in these transactions, right? So a lot of these are long-standing supply relationships, right? I mean, that's basically what's occurred with some of this transition from, Asia Pac into more North American, Mexican style trade. But I think in general, it's about understanding those risk profiles so that when you have a conversation with your supplier in Shenzhen, you can actually ask the question of saying, hey, you know what, I'm seeing that this industry is having a margin compression. Will you share your private financials with me so that I can get an idea about what your risk level looks like? So if I'm going to make other investments or make more orders, like how do I reconcile this within my 2026 budgeting?
Michael Flum, CEO, President, CreditRiskMonitor.com Incorporated, CRMZ. Trying to keep that supply chain going so you can get your Big Biz Show plushie. Coming your way in 2026, by the way. All right, keep it here. Lots more coming your way, by the way, after this. Don't go. It is a Big Biz Show. We're live from the Loft 100 studios. Southern California, wherever you're watching, wherever you're listening, as always, a big thank you for being part of this wacky family. They are always part of this wacky family, Day Trader Trio, the wackiest out of the bunch, crazy radio guys. That's actually me and Sully in our old radio days. Back here at the bar, it's Costa, it's Maribert Godwin. Of course, it's Sully.
Patrick DeHaan joins us. He's the head of petroleum analysis at GasBuddy at GasBuddy.com. My question for you guys, if I'm not mistaken, you guys have 12 million individual price reports covering about 150,000 gas stations across the country. What is now the average price per gallon? Are we going up higher? Are we lower? We're through the mysterious, what I call in the gas industry, the mysterious 5G. The ever elusive 5G, which is the ever elusive summer blend. Same thing, right? I don't think it's really anything. Where are we at? Are we heading the right direction yet?
Well, we're still heading in the right direction. We barely eked out a seventh straight consecutive week of declining gas prices, but we may fade away from there. We're at about $2.73 a gallon as of this morning. Now, we're seeing a little bit of an intraday jump as we're seeing prices go up in several states. So we'll keep an eye on that. But we're getting close here, maybe just a few weeks away. I know you talk about California there. California is also, by the way, special, and it's the first state that will eventually make the transition back to summer gasoline. That's actually just a couple of weeks away from kicking off in California.
Of course it is.
And the rest of the nation
because summer goes from March until late December, according to the gas guys. Interesting that Oregon is not completely yellow, because the last time we showed this thing, Oregon, Washington, and California were completely yellow. I've got a philosophy, Patrick, and I don't know if I think maybe I've shared this with you over the years. You've been with us for so long, but I want you to answer me this. I always say that crude oil prices translating into what we pay at the pump is more about competition and closures than anything. I sort of feel like crude oil to a gas refiner is like potatoes to McDonald's, okay? The cost of French fries at Burger King, and just because the cost of potatoes goes up doesn't necessarily mean the cost of French fries is going to go up. But I think competition kind of moves that, because companies want to get the most they can for their product. They won't be able to charge too much because of competition. What's the real translation between crude oil price and what we pay at the pump?
Well, I mean, as you said, businesses is not about being benevolent and not making a profit, right? It's selling at a higher cost. Necessarily, there's balances here. The highest cost you can without pushing your customer to go to the competition or giving the competition room to lower their prices to incentivize someone. So, California is a real interesting state in that the cost of living is higher, but wages are higher. So everything in California is going to be higher because there is a higher cost standard of living. But you say that also then influences labor costs, property taxes, property values, real estate. So California, of course, on top of that, makes it more complex by having its own blend of gasoline and special cap and trade taxes. And there's just a lot that goes into it. And California retailers also do a little bit better than what we see nationally, because the state has really, wouldn't say cracked down on competition, but it's not the most friendly, most competitive state. And that's why you have companies, oil companies, that may be looking to move out of the state. That's why we're now talking about the Valero refinery in Benicia, California, slated to close in April, because the state has tightened the guardrails a little too much.
Patrick DeHaan is the head of petroleum analysis at GasBuddy, GasBuddy.com, PatrickDeHaan.com. Patrick, now that we are the Venezuelan overlords, what? I mean, when are we going to see any sort of results?
I mean, they got more oil than Saudi. It seems like we should be making friends.
Right.
But I'm not trying to be political. I'm just talking about gas. And of course, once again, talking about California.
Yeah. So, how far out does that affect petroleum prices in the United States, if it ever does?
It's a convoluted, it's a long subject of conversation. I could go on and on about it, but essentially this, Venezuela has huge potential. We've all seen those numbers, right? 300 billion barrels of proven oil reserves. Probably not all of that is recoverable. Mm-hmm. But a lot of the infrastructure in Venezuela, I mean, let's face it, they've been under years of heavy sanctions. Under Trump's first term, he heavily sanctioned Venezuela. Oil companies would have to get around those sanctions and spend years of rehabilitating the existing infrastructure. But as we heard over the weekend, ExxonMobil also not really in a hurry to get back into Venezuela, because ExxonMobil, as well as ConocoPhillips, two major oil companies, previously have been burned twice by Venezuela. Back in 2007, Hugo Chavez just said, hey, if you're not going to play by our game, we're going to take over your assets. And by the way, that's where President Trump has probably been saying that Venezuela's stolen U.S. oil company assets. That's true. But, to this point is, President Trump has made it all sound very easy for this to all happen. But companies would have to risk a tremendous amount. Keep in mind, while Maduro's been captured, there's a lot of hardline loyalists who would, continue to carry the torch in Venezuela. Nothing's necessarily changed from a risk perspective. So all of this is years down the road, and it's still fraught with a lot of potential issues that could develop. So Venezuela is not going to be a major contributor to oil price and gas price movements for potentially years.
Hey, Patrick, I have a very basic, probably dumb question.
Can you loan us some money for gas?
Yes. But it's like that. Okay, so when in the morning, let's say the gas station's in a certain area, who is making the decision to raise it a penny or a dollar? Or where is that coming from? Is someone going to the next gas station next door and saying, oh, across the street,
no, I think
this,
they get a
I got to
report,
raise
don't
it?
Don't they get a report? From,
what is it?
Well, I mean, I think if you're a Chevron franchisee or AMPM, I would assume that the parent company is giving direction, is it not?
It may not, unless it's an organized. If it's a mom and pop owned station, then no. Some of the newer convenience stores, some of the big brands we've heard about, yes, they're very much integrated. But your Shell, your BP, that might just be a mom and pop. So what they generally do to determine their prices, they may get price updates from the wholesaler or distributor that brings them gasoline based on if oil prices moved up or down. They may send that owner a text message, an automated message saying your cost at 6 o'clock is going to go up or it's going to go down. And so station owners have a little bit of discretion, right? Their margin, what they buy for and what they sell for, it's generally at their discretion, but they'll utilize those text messages saying this is coming down the rope or down the pipeline, no pun intended. And the owner then will adjust their prices accordingly based on the way the market moves.
But then do they have a spy that looks across the street to say, oh,
yeah,
they're 50 cents more?
They absolutely do that. They survey their competitors on a daily basis, sometimes hourly basis. This is what technology has solved, is because there are people that distribute gas price information, and station owners can absolutely use that to their advantage.
Cool.
Patrick DeHaan, head of petroleum analysis at GasBuddy. Go to GasBuddy.com. Also, Patrick DeHaan.
You know where they're making their money, right?
Food,
chips and soda,
beer.
That's where gas stations make their money.
Right.
They get you in.
Energy drinks.
Slim Jims.
Slim Jims.
Oh, Funyuns.
6 feet of meat.
Speaking of 6 feet of meat, we're all out of it. I am sorry. That'll do it for this edition of the Big Biz Show. We'll see you next time.